Evening, everyone. I hope you guys are doing well. Please just by indication of a thumbs up if you are able to hear me as well as to see the screen. Great. So now, firstly, we will be looking at this required A. I am first going to read required so we get an understanding of which topic to focus on. So the required reads as follows. Determine the total minimum price for the 20 tables that should be charged for the order from ABC Ltd. So just looking at this, we need to determine the minimum price for an order from ABC Ltd. So in essence, this is a special order from ABC Ltd, right? So special orders, we need to deal with them in terms of relevant costing, right? So basically, after you read the required, you need to identify which topic does it relate to. So now once we have identified that we are dealing with relevant costing and with a particular focus with the special order. He is essentially promoting his own brand. So let me just mute an individual. Okay, now, wait. So the required further states that we have to clearly indicate all the costs that should and should not be considered for the special order. So now what they are doing is that they are confirming to us that we are dealing with a special order and we have to give reasons for inclusion and exclusion, right? So we have to ignore the VAT, which is common. Now, since we have identified that we're dealing with relevant costing with respect of a special order, now we need to understand what is a special order and what are the key things that we need to look out for when we are dealing with such a question, right? So the first thing that you need to understand is what is a special order. So now, a special order is a once-off order. Obviously, this will be at a special price, right? So now this will be at a special price. So now the special price will usually be lower than the selling or lower than the normal selling price, right? So the fundamental rule of relevant costing, I'll give it to you now. So the key principle is as follows, right? So what you're going to do is you are going to only include relevant costs. Right? So you are only going to include relevant costs and therefore you are going to exclude all your irrelevant costs, right? So you are going to exclude your irrelevant costs. So now, after you do that, before, let me just give you a logic which you can apply to identify your relevant and irrelevant costs, right? So the first one is to identify what are relevant costs, because of it can be confused on which cost is relevant and which cost is irrelevant, right? So now we need to identify our relevant cost. So let me just change the color. So as we are identifying our relevant cost, we know that This would be, or this are future incremental and unavoidable, right? So these are future incremental and unavoidable costs that will change um, because of us accepting the special order, right? So now I am just going to briefly go through examples, but I won't be writing them onto the screen, right? Sorry about that. So now, for example, with direct materials, right? So with direct materials, if you must buy additional materials, right, for the 20 tables, right, you are going to include them because of they would be relevant. But now, if the materials are already in inventory but can be used elsewhere, we are going to include the opportunity cost, right? However, if the direct materials are scrap, meaning that they have no alternative use, you are only going to include the disposal value if there is any, right? So now that's for direct materials. And then moving on to direct labor. So with direct labor, we are going to include direct labor. It is relevant in some cases, right? So if labor is paid per hour and more hours are required, we are going to include. But now, if direct labor or maybe I should write this down. I'm not sure. Okay. Okay, let's go back to direct material so that you guys are with me. Right. So going back to direct material so that you guys are with me. So direct materials. So as I said, um, for additional materials, we are going to do what? We are going to include, right? And then if materials are on hand but could be used elsewhere, then we are going to do what? We are going to include the opportunity cost. Right. Now, if materials are scrap, meaning that they have no alternative use, we are going to include the disposal value, right? So this is if there is any disposal value, right? So that's what you do for direct materials. So I wrote so that we are on the same page. Because of now what we are doing here, we are trying to understand what this required is talking about. So we need to make sure that our theory is on point or our understanding and principles of relevant costing in order for us to comfortably answer this required A, right? So now when we move to E, which is the direct labor. So now when we move to B, which is the direct labor, then now there is if labor is paid, if labor is paid per hour and more hours are required, then we are obviously going to do what? We are going to include, right? So if labor is paid a fixed salary or at a fixed salary, and obviously there is idle time, we are not going to include, right? So we are going to exclude, right? Now, if overtime is needed, then we are going to include, right, the overtime rate. So we are going to include at the overtime rate. Then now we have C. C talks about the variable manufacturing overheads, right? C, not fee, sorry. So here we are talking about the variable manufacturing overhead. And now all this that I'm doing is the identification of relevant cost. Remember, all this falls under the identification of relevant costs, right? So now, with variable manufacturing overhead, this increase with units produced, right? So we obviously now have to include what? The variable portion, right? So we are going to include, right? So now they may be in D, um, they, let me just admit an individual or two. Okay, great. So now in D, they may be incremental costs that are specific to the order, right? So they may be incremental cost specific to the order. So what am I talking about? Yeah, I am talking about maybe a special packaging. Let me write it here. So here we are talking of special packaging, maybe extra supervision, all right? So now, if this is the particular case, such incremental cost to be included, right? So let me just mute these individuals. Okay, great. So they need to be included. Now, this is how you would identify relevant costs, right? So I am going to move over to the irrelevant costs. But before I go there, are there any questions of how we are going to be identifying the relevant costs? Or with regards to anything that I've mentioned now. So you are more than welcome to type in the chat box or unmute. So I will allow 2 minutes for that. So meanwhile, we will be moving to the identification of irrelevant costs, right? So we have talked about relevant cost. Now we're talking about irrelevant cost. So these are costs that obviously now these are costs that do not change whether the order is accepted or not, right? So these are costs that do not change whether the order is accepted or not. So here, for example, we will be looking at A. So let me check what in the chat box. So A, we will be looking at the fixed manufacturing cost. So now, with the fixed manufacturing cost, these costs are relevant, right? So any fixed manufacturing costs are irrelevant unless if they are additional. We just need people who have. Okay, so fixed manufacturing costs, so irrelevant, right? Here I am talking about your factory rent, your factory manager salary, your depreciation, right? So this one to only include if an incremental cost will be occurring, right? So now, um, fixed manufacturing cost, we are going to exclude unless if additional, right? I can say additional capacity is required, right? So I don't want it to be like this, but okay. So now, when we move to B, the identification of irrelevant cost, what we are also going to include as irrelevant cost is sunk cost. So sunk costs are irrelevant. So obviously now, sunk cost we are going to be excluding. We need to exclude this cost. This cost normally relate to the past research, past design work, or cost of machines that have already been purchased. So in essence, sunk costs, this cost cannot change in the future, right? So we are going to exclude them, right? So what we are also going to exclude is the normal selling and admin costs, right? So if this cost do not change, we are going to exclude them, right? So exclude if they don't change, right? So here I am talking about our general admin, our normal marketing, etc. Right. So what we have just covered here is how to identify relevant cost and irrelevant cost, and also what we are going to be doing with regards of the special order, right? And the main reason why we have broken down relevant cost and irrelevant cost is because the main principle of what we are dealing with today is that we only have to include the relevant cost and exclude irrelevant cost, right? So at the end of the day, what we need to determine is the minimum price for the 20 tables, right? So that's what we need to determine. And now, moving over to the scenario, right? As much as we have to focus on Pine LTD, we also need to obtain an understanding of the background of the entity. So we'll be focusing on the whole scenario that relates to Pine Ltd, um, Fine Pine Ltd rather, and we will be answering thereof. So now as we scroll up, so just reading the background information of High Rise Ltd, it says High Rise Ltd is an investment company with 100% shareholding in both Fine Pine Ltd and Cass Ltd. These companies operate in two different industries. Now, Fine Pine is a South African company that specializes in the manufacturing of wooden office furniture. The company has received an order from ABC Ltd. So now, the company has received a special order, right? So the special order is to design and manufacture 20 wooden office tables, right? So this is a special order, and we have already identified we are dealing with a special order, and therefore we need to apply relevant costing, right? Nonetheless, the tables will be completed over 2 months. So now, the cost that we will be including will have to be over a duration of 2 months, right? So the cost that we are dealing with, we need to include them over a duration of 2 months. So now, just a minute so that I plug my laptop. Okay, great. So now, it further reads as follows. One wooden table requires 3 meters of varnished wood, 25-gram packet of nails, 3 liters of glue. So these are the requirements. So now, reading note number 1, it says Fine Pine will not have the necessary internal capacity to design the required office tables. The company will contract a designer for this order at a total cost of 5,000. So now, how we are going to be answering this question is through line by line or item by item, right? So we will not read everything and then answer afterward. So we will read and answer. I think that would be the best choice for us so that we all obtain a common understanding, right? So now, if you are uncertain of anything, you are more than welcome to stop me as I am teaching. Now, what we are calculating is the minimum price for 20 tables, right? So that's what we have to calculate. So first and foremost, Fine Pine will not have the necessary internal capacity to design the required office tables, right? So now, the company will contract a designer for this order at a total cost of 5,000. So this fee, obviously, they stated in the required that we have to clearly indicate all costs that should not be considered for the special order and the reasons. So whatever that we'll be talking about, we need to stipulate its reasons, right? So okay, we have the designer. So now for the designer, we could say that this fee is incurred specifically for this order, right? So it is future and incremental. So it's a future cost and it is incremental, right? So now, if you can further stipulate your reason, right? So if the order is rejected, so if the order is rejected, the fee is voided, right? So, and all this agrees to the definition of relevant costing, right? So remember that relevant cost needs to be unavoidable, right? Relevant cost needs to be unavoidable cost. So now, if we do not contract the designer, it means that the special order will not go through. So in simple terms, this is an unavoidable cost. And this cost is 5,000, right? Great. So now you move to note number 2. Vanished wood for these tables will be purchased from a local supplier at the current purchase price of 100 rands per meter. The wood will be vanished at the supplier's premises at an additional cost to fine pine of 20 rand per meter. The vanishing will be done by 2 experienced workers from the supplier who each earn a salary of 4,000 per month. Wait, just wait, someone. Okay, great. Right. So now there's a lot in one. So firstly, um, let's deal with the vanished wood. Right. So now, with regards to this vanished wood, right? So we can say that the wood must be purchased solely for producing the 20 tables, right? So wood uh, must be purchased solely for producing the 20 tables, right? So obviously now this is a relevant cost, and also the above one is also a relevant cost. Okay, so now we need to do some calculations, right? This is for 20 tables, right? And then they are saying that it will be purchased at the current purchase price of 100 rand. So what we are going to do is that this 100 rand is per meter. So we need 3 meters of vanished wood. So what we are going to do is that we are going to take um, 20 tables multiplied by 3 meters multiplied by the price of 100 rand, right? So now, when you multiply this 3, what do you get? Can I have that answer in the chat box? Someone please multiply that for us. Okay, great. 6,000. Now, moving over to the second sentence. Wood will be vanished at the supplier's premises at an additional cost to fine pine of 20 rand per meter. So now we are talking about the vanish. Let me mute someone. So vanish of food. Now, what we can say, this will be obviously the same as the above, right? Um, you could say that this is an incremental material cost that only arises if the order is accepted, and therefore this is a relevant cost. But we do get an amount of, we need to also multiply by the 20. So it will be 20 multiplied by 3 multiplied by 20, right? And what do we get in the chat box? 1,200. So, but now moving forth to the third one, it says the vanishing will be done by 2 experienced workers from the supplier who earn a salary of 4,000 per month, right? So now, when we talk about these salaries, right? So these salaries are fixed per month. And what do we say? Fixed manufacturing costs are similar. And when we are talking about labor, so if labor is paid at a fixed salary, we are going to exclude it, right? So now that will be our reason, right? So we can say they are paid um, fixed salaries. So this is regardless of the order. And therefore, there is no incremental cash flow. And this makes this cost to be irrelevant, right? So we are not going to include anything, right? Okay. So now moving over to note number 3, 200 grams of nails are in inventory. At present, the cost of these nails was 1,000 per kilogram. At the time that they were purchased, nails are used in all of the tables, and the current wholesale price is 1,200 per kilogram, right? So now we do nothing with the old cost, right? So the old nails cost, we could have two sentences now. We could say historic purchase cost is a sunk cost, and obviously now we cannot change that, right? So therefore, um, it is irrelevant in decision making, right? So now we are going to move over to the incremental cost, right? So we are going to move over to the incremental cost. So now, as much as let's break it down, right? So the nails were originally in inventory, but obviously, as we stated above, at the original purchase cost is sunk. So you could write a statement that says, however, using the nails result in an incremental cost, right? So obviously this cost would be a cost of cost of these nails was 100 rand per kilogram, right? And we need 25 grams. So what we are going to do, we are going to take this 1000, and as this is per kilogram, this is the old cost. We are going to take the current cost of 1200, which is per kilogram, and then we are going to prorate it to 25 grams, right? So it is not going to be difficult to do a prorata of that. So now, how would you guys in the chat box determine the incremental cost for us? So 200 grams of nails, which is in inventory, which has a current wholesale price of 1,200 per kilogram. So we just need to prorata an amount to 25 grams. So we need to have the answers in the chat box. 25 divided by 100 multiplied by 1.2. No, that's not the correct answer. Remember what we need the nails for 20 tables, and one table needs 25 grams. So we need the incremental cost. What would be the incremental cost that we will be including for the nails? Right. So we have 20 tables. That's what we definitely have. Now we need to determine the cost for those 20 tables. Okay, so now let's look at it in this way. So now there's an answer in the chat box. Okay, so we have 20 tables, right? So now of these 20 tables, each table is going to require 25 grams, right? Each. So now the cost per gram would obviously be the 1,200 divided by 1,000, which represents the cost per gram, right? We wanted to get the cost per gram. So now, once you have it like this, then it's straightforward, right? So it means that our cost will be 600. So 600 would be our incremental cost, right? Thank you for the answers in the chat box. Now, moving over to the next one, right? So Fine Pine manufactured tables 9 months ago that required similar special glue, and they currently have the exact quantities that is required of the special glue. The glue will expire within 3 weeks of using the tables being completed and will become toxic after the expiry date. The glue will have to be disposed of in a manner currently required by legislation. The glue in inventory originally cost the company 3,000, so this is an old cost, and will be disposed of at a cost of 5,000 if it is not used, right? So remember what I said about using the disposal cost, right? So if materials are scrap, we need to include the disposal value, right? Let me just okay, if materials are on hand but could be used elsewhere, we include opportunity cost. So that's the only difference. So now we are going to include the disposal value, right? So glue, we could obviously provide one reason. So the glue in inventory would be or would have been disposed of at the cost, right? Or obviously, if the expiry date reached, would be or for no value, right? So between the two. So now, by using it in the order or in the special order, so now the business avoids a disposal, right? So now, in essence, what we have here is an avoided cost, right? So thus, it is relevant and reduces the minimum price, right? So now the reason why um, we are saying that it is an avoided cost because of this in essence is a future cash saving, right? So of an amount of obviously this will be the 5,000. So then we move to number 5. The company bought a sewing machine 2 years ago at a cost of 500,000 to cut wood into required sizes. The machine has an estimated, sorry about that. Yeah, need to move over to the other page. So now here we are talking about the sewing machine. So the sewing machine is used to cut wood into required sizes. The machine has an estimated useful life of 5 years. The machine will undergo its normal annual maintenance a month after the special order at a cost of 40,000. This scheduled annual maintenance will not affect the delivery date of tables. So I don't see any incremental cost here with regards to the machine, right? So what you could say with regards to the machine, you could say both of these costs are sunk and non-cash because of now the depreciation obviously now will obviously be non-cash, and what you could say this would be irrelevant to a special order decisions, right? So you are not going to include them, right? So obviously the original cost is sunk. Um, Now we move to number 6, right? Because of now, if we want to talk about the scheduled maintenance, we can elaborate on it, but it is an cost that we cannot avoid, right? So the annual scheduled maintenance, obviously now, what you could say is that this cost will occur whether or not the order is accepted, right? So now, obviously, this is an unavoidable cost. Unavoidable cost. So this makes this cost to be not incremental. Right. Now moving over to number 6. In order to meet the deadline, 3 casual employees will be hired. So this will be additional employees on the contract at a cost of 2,500 per month. And remember at the top we read that this contract or this special order will be completed over 2 months. That's why it's very important to know the duration. So now, these employees will be supervised in addition to his normal responsibilities by the company factory supervisor who earns a monthly salary of 10,000. So now, um, I will start off with the factory supervisor. So we will start off by the factory supervisor. So now the factory supervisor is a permanent employee, right? So permanent employee. So therefore, the salary does not obviously does not change with production volumes, right? And obviously now this is a fixed cost and unavoidable cost will be incurred, right? So making this cost to be irrelevant. Now moving over to the additional employees that will be hired, right? The casual employees. So now with regards to the casual employees, yeah, in essence, we are talking about a future cost, right? So this is a future cost. This is a future cost and incremental cash outflow will occur, right? So therefore, this is a relevant cost. And now, being a relevant cost, we are going to take the 2,500 for each employee. So how many employees will be hired? 3 employees will be hired and they will be working for a duration of 2 months, right? So when we multiply this, we would have 15,000, right? Now, moving over to number 7. Fine Pine owns the manufacturing facility. The company pays the local municipality monthly rate of 3,000. Completed tables will be stored at the warehouse, which the company leases at a monthly cost of 2,500. The lease agreement is for the next 5 years. Now, number 7, right? When looking at it, it's not really difficult because now these are monthly rates, right? So, for example, if we look at the rate, we could say that property rates do not increase with the special order, right? So we could say these are irrelevant. And then obviously now, when we look at the rental, that it is being paid of 2.5, right? So now the rental is being paid, right? So what we would say is that the cost would be incurred even if the order is declined, right? So therefore becomes a irrelevant cost. Then moving over to point number 8, it says the monthly fixed manufacturing overhead are normally 55,000, but it is expected to increase. So there is an incremental cost over the next 2 months. This will be due to the additional cash expenditure being required of this order. So it is an incremental cost. There is an incremental increase, right? So now, what we are going to say with this incremental fixed overhead, incremental um, fixed overhead, right? So base fixed overhead of 55,000 is unavoidable. It is unavoidable, therefore it is irrelevant, right? Now, but the increase from 55,000 to 58,000 is caused directly by the special order, right? So this part is avoidable and incremental, right? So the increase of 3,000. So it would have been 3,000, but now this is for a duration of 2 months. Remember this, this is a fixed monthly cost. So we would multiply by 2, and therefore we get an amount of 60,000. I mean 6,000. Right. So now what we are going to do is we are going to add all this amount together, and we will have the minimum price that we are going to charge for this special order. So as I am adding all the costs, so I arrive at a minimum price of 28,800, right? So this would be our minimum price based on relevant costing. So now what have we done here? We have determined the total minimum price for the 20 tables, right? We have clearly stated all the reasons for the cost that were included and the cost that we have excluded. So now, this is how you break down a required. So firstly, you need to understand the required, right? So we know that the main principle of this question was to only include relevant cost and exclude irrelevant cost. For us to be able to do this, we needed to understand what are relevant costs, which we have identified here, and we needed to know what are irrelevant costs, which we have identified here, which made it easier for us to know which cost to include or which cost to exclude, right? So now, based on what we have done, any questions? Okay. If there are no questions, it brings us to the end of today's lesson. So tomorrow we will be looking at C, E, and obviously now F and G. Right. That's what we will be looking at for tomorrow. Okay. Bye everyone. I'll share the recording to you guys.